real treat. The market has changed a lot, and I will tell you, it's not great news. Certainly a pretty good news if you're buying, maybe not the best news if you're selling. But I'm kicking off this video by showing you this new program that we have. It's right on my website, which is the ViewCalgaryAreaHomes.ca. And you can go right on this page and get an instant estimate and a cash offer on your home. This is a legitimate program. It's very transparent. We give you 90% of market value. There's no commissions and no fees, and we'll buy your house. So if you're selling, you could take this offer. Like, we could actually list your house if you want to try getting more of the retail price first. The cash offer is good for 30 days, so you can try going on the market. If your house doesn't sell, the cash offer can kick in at any time within that 30-day period. So definitely in a market like we're in right now, this, I think, is a really good option to consider. So certainly reach out, but you can go right here, put your address in, and it's really simple how it works, and we can offer that to you if you're a seller. All right, let's head over here to the monthly stats for the city of Calgary, and I'm going to scroll right down here to the hard data that you've all been waiting for. And you'll notice right here, I'm going to grab my highlighter, and you'll see right here in May of 2025, the Calgary market sold 2,568 homes. So that is 16.89% less than a year ago. What is continuing to be the problem, and this is why this market is softening, is 6,740 listings. That is 97.54% more inventory than we had a year ago. So we now have 2.62 months supply of inventory compared to 1.1 month supply last year. So these numbers are significant. Having a 17% drop in sales and a 97% higher level of inventory, that means if you look at the absorption rate, which we'll look here in a minute at all the different types of properties, it means that there's a much smaller percentage of homes that are getting listed or selling. And I'll tell you, I've been down this road before. When the market changes and it becomes a more of a buyer's market, there's a real struggle for sellers to accept this. It takes usually on average a solid 6 to 8 months for many sellers to really clue in that their house is just not worth what they thought it was. I can tell you, I've been on several listing appointments in the last 2 weeks, and I've had just some homeowners that just had a number that wasn't possible. What we're seeing right now is for every new house that's coming on the market every day in Calgary, another house is reducing their price. And that's just what's going to happen, is for the people who are motivated to sell, are going to reduce their price and make it more attractive for a buyer. So for a buyer, you have some really good opportunities right now. And, I want to tell you something. I hope you all pay attention to this. I've done this a long time. When the market is favoring sellers and the prices are rising and there's bidding wars going on, it can feel like it's never going to stop, but it always does. And on the flip side of that coin, when the market is dropping and things are going bad, it's funny how a lot of people just think it's going to keep getting worse. It never stays that way either. It always turns around. Nobody can pick a bottom. Nobody can pick a top. Nobody could have known that a year ago was really the top of the market for low levels of inventory and high demand. Nobody could have picked it. And right now, we have no idea where the bottom is going to be. This is why if you're a buyer, don't sit on the fence too long. But, to me, if I was a buyer, start looking around and just look for the right opportunity. If the perfect property comes up, you can negotiate a pretty good price right now. But I know there's some buyers sitting on the fence going, well, let's just wait and see what happens. There's so many things going on right now in the world. Let's just see how it's going to go. Maybe things are going to keep getting worse. The reality is, you don't know when that's going to all of a sudden turn around, and it can turn around rather quickly. And then the next thing you know, you're back into a seller's market, and that can happen. I've seen it happen. I've seen it happen over and over again in my career. So that's why my best advice is to take advantage of those opportunities. Now, if you're a seller, I'm going to tell you right now, you're going to have to price your house aggressively if you want to sell it. You're just going to have to. If you're looking at data that's 4 or 5 months ago, say the house down the street sold 5 months ago for $700,000 and your house is about the same kind of house, it doesn't mean you're going to get $700,000 today. I'm not saying that the prices haven't fallen off the cliff, because you'll notice that if you look at our benchmark price, right now we're at $589,000 in the month of May. A year ago we were at $605,000, so we had a 2.5% drop in pricing from May of last year to May of this year. But year to date we're at $588,000 right here, 840, and you can notice that year to date last year at this time we're at 589,240. So it's not that the prices have dramatically dropped overall, but I'm just saying there's some softening. And so the house that was maybe $700,000 5 months ago, that house potentially today could be 680, 685, 690, somewhere in that range. It's still going to be probably close to $700,000, give or take, depending on, the style of the house and the demand of the neighborhood and what kind of condition the home is in. All those sorts of things are going to weigh heavy on any buyer's mind, but it shouldn't be a dramatic difference. Like I said, unless your house was, maybe not in good a shape as the house that did sell for 700. So you got to pay attention to these sorts of things. I also noticed, by the way, there's a lot of builder incentives right now, so you can tell there's a lot of builders that are just not moving a lot of product. So I've seen even some of the builder prices starting to soften here. But here's our absorption rate. We're looking at detached houses, so 42.57%. So that's what I said a year ago. Look at this. I mean, 86% of the houses were selling in May of last year. Now we're at 42.57%. So that's the bottom line. If you're selling your detached house right now, you got about a 43% chance of selling it. So if your price doesn't reflect carefully where it should be, it's going to sit there, because the buyers are going to pick out what they feel is the best value. And like I was saying in this video, if you're a buyer, you can be choosy. You can look for that opportunity. You can look for someone, a seller that might be slightly more motivated and shop around a little bit more. There's no real sense of urgency for the buyers, so I mean, they can take their time. Whereas if you're a seller, you've just got to be competitive. So 769,400. You can see overall the prices at this point are holding, but I can tell you if everything continues the way it's going, if our inventory levels keep increasing and the demand keeps softening, well, you guys know that the prices are going to start softening with it. So if you're selling right now, this may be the time to really consider not wait too much longer. Here's the hard data. 2,995 detached houses were on the market. 1,275 of them sold. The people who were lucky enough to sell did it in an average of 28 days. So that should tell you something, that if you're on the market anything past 3 weeks and you don't have an offer or you're not getting showings, you have to really take a look at that pricing. Here is the market distribution, and you can see $600,000 to $700,000. That is the most popular price point, and that's $700,000 to $800,000. It was creeping up a little bit towards last year, but I think with the softening of the market, I think these market distribution is probably going to stay the same, I would suspect, for at least maybe the next 3 to 6 months. Interestingly enough, though, look at the $1 million to $1.5 million, 10.9% of the market, and 1.5 to 2 million is 3% of the market. I find this interesting that that luxury market, there still seems to be quite a bit of movement, a little bit more movement than I would have guessed in this slower moving market that we're in. So here we are in the semi-detached, 47.23%, pretty similar to the detached. Same thing, look at last year, almost all of them listed sold. Now we're under 50%. $697,300 is the benchmark price. So you can see that price is still holding as well. Month over month, it was actually up slightly, and year over year, we're still up slightly. So there's still a pretty good demand in there. And I think it's just because there's so many buyers that would like to be in that budget of 600 to 700,000, or even maybe the high 500s if they can find something on a semi-detached. 256 out of 542 sold. Again, look at the difference between last year. There was 259, but the inventory was a lot lower than 542. That's why almost all of them sold. 29 days to sell. There it is. 500 to 600,000 is the most popular. 600 to 700 is the next popular. And that's something to take note of. There is still some pretty good semi-detached properties in the 500s. And I'll tell you, there's even some new builds that I know of that you can get into some of these with suites in the basement as well. So there's some pretty good value here without having to go into the condo fees. Over here, $1 million to $1.5 million, 11% of the market. So now these semi-detached are still doing okay in the inner city, although it definitely has slowed down. I see it. I've got one listed right now, and I got a beautiful property listed right now in Montgomery, and I'm shocked that we haven't sold it yet. So if you're in the market for something like that, reach out to me, because I got something great with a legal suite in the basement. So here we are with row houses, 41%, and I'll tell you, what a turnaround. I mean, look at a year ago, everything was selling that was listed. We actually had a shortage of inventory last year. Now the stats for the month of May, 114% more listings on row houses than a year ago. That is really significant, 114%. So we are definitely see some price softening here. You can see we're down 0.83%. We're down 1.92% with a benchmark price of 453. You know what's happened is we had a lot of builders build these townhouses. It wasn't that long ago. We just didn't have enough of them, and then we had an influx of people from Ontario buying them up. All these investors wanted to buy them up, rent them out. They just went a little overboard, and now we have just too much inventory. We're seeing the aftermath of it all. It's funny how these things work themselves out, but now I think it's going to take some time to absorb some of this inventory. But boy, if you are in the market for one of these, you should reach out to me. I can get you a good deal. I have some connections on some stuff right now that is priced really well, and there's so much inventory, and there's some real motivated sellers out there. I'll tell you, some of these people, they bought them with the builder as an investment, and they've noticed that now they can't even rent them out for enough money to break even, and they're wanting to get rid of them. I've had a few of them just recently. They're quite motivated. They're stressed. They just want they feel like it's a bad investment. They want to get out. So that's an opportunity right there for for you if you're a buyer. And you can see down here, 458 out of 1,116 sold. What a difference, like I said, a year makes, where we had 540 that sold, but there just wasn't enough inventory, to service that. 33 days on market. There's the price point that's most popular, 400 to 500. It just drops off a cliff. That's obviously the sweet spot. And I can tell you, you can get some nice ones. So there's stuff with 2-car garages and all sorts of things that are now in the 400s, where they were pushing well over the $500,000 limit a year ago, and they've dropped. So there's some real good value in the 400s that you can get into. So here we are with the apartment condos, and I'll tell you something else we've noticed. There's been more and more people where their mortgage is now up for renewal, that they were locked in at those lower interest rates, like 2.7%. And now all of a sudden they have to, take a new interest rate, and that's also causing some of this inventory to come on the market. And we've seen a lot of inventory come on the market for apartment condos, and now the demand has dropped off 27.74%. That's huge, considering a year ago was 81%. I mean, that is a significant drop. So another wonderful opportunity if you're a buyer to find yourself some apartment condos. Pricing, you can see $335,000. It's down slightly. It's not like it's fallen off a cliff, but I just noticed condos, because there tends to be a lot more inventory in relation to the demand, and that's why you'll find the apartment condominiums tend to price drop a little quicker than detached and semi-detached and row houses. I don't think we're going to see a massive correction. I really don't. I think Alberta is positioned quite well. I think there's really, to me, in my opinion, even though I can't speak for everybody, but I've been doing this a long time, and I just talk to a lot of people each day. It kind of gives me a poll for what's going on. I think there's really just a little bit of a nervousness as to what's going on politically, and I think there's still lots of people that can and they're able to buy a property. There's just quite a few sitting on the sidelines just at the moment. I think they're just waiting to see how politically these things shake out with tariffs. They talk about Alberta separating, maybe Canada going into a recession. There's just a lot of that noise that some people here in Alberta are just waiting to see what will happen. That's just my theory, because provincially we're withstanding all of this uncertainty probably better than any other province in Canada, and I think we're going to continue to do so. I think the demand for oil will stay. There's always a demand for oil and gas, and that's going to help us here in Alberta. And I think the good news is there are some ongoing talks with Ottawa on how to move more of our product, and I'm pretty optimistic we're going to see some of that happen. That's going to impact our real estate market. So I think, like I said, there's an opportunity here to take advantage of this year if you want to, and I'm sure some people might even wait till next year. But to me, I think you can be confident that you can still do something this year. I personally don't think you have to wait a whole year to see what's going to happen, because it can look very different a year from now. If all of a sudden the uncertainty stops, this market could change really fast, and you might look back and wish that you had bought. And I've seen that happen over and over again. So 579 out of 2,087, and you can see that that's not a massive difference in pricing, but you can also notice 41 days. It takes a little longer to sell a condo than it did, even just 6 months ago. So be prepared for this. Here's our price point that's most popular: $300,000 to $400,000, and then of course we still got, I'd say, a reasonable amount in $200,000 to $300,000. But I know there's quite a few condos just over the $300,000 mark. So 2-bedroom, 2-bathroom, probably the most popular, and there's inventory really all over the city. So I'll just wrap up by saying, if you're interested in the cash offer program, go ahead to get to our website, ViewCalgaryAreaHomes.ca, and if you're really looking to buy and you just want to look for an opportunity that's a pretty good deal, just reach out to me and I will go over with you how we find those hidden treasures. I'm telling you, there's a strategy, and the strategy is not just going to a bunch of websites every day. There's a better strategy than that for finding good deals. So just reach out to me and I'll tell you how it all works. And we'll see you all next month. And don't forget, we have our Stampede breakfast coming up on July the 5th at our office. And that is 6420 6A Street Southeast. It starts at 7:30 in the morning. You're all welcome to come. I'm going to be sending out an email to everybody in my database as well, but put it in your calendar. Lots of fun, free food, all kinds of games for the kids and music, the whole bit. We'd love to see you come out and join us.